Hey everybody, Shannon here from alphatrends.net. It is Friday the 26th of July. Hope you had a good week in the market. We were kind of all over the place for the indices. Biotechs had the best week, up 4%, followed by the Russell 2000. Of course, that's where we've seen the recent strength. And the weak areas continued to be weak. Semiconductors down 3%, which led the NASDAQ down as well, and the S&P a little bit lower. So let's take a look at these charts and make some sense of it. The daily time frame is on the left. On the right, we have a 30-minute time frame. On that 30-minute time frame, I have a 5-day moving average. That's the orange line. 65 30-minute periods is equal to 1,950 minutes. There are 1,950 trading minutes in 5 days. So that's the true simple moving average you were looking at with the orange. What I always talk about is the market is guilty till proven innocent while the 5-day moving average is declining. And that's what we saw on Wednesday, or was that Tuesday, that we had gotten above the 5-day moving average, but the 5-day moving average was declining. People ask me, well, is that a simple moving average or an exponential? And I always use the simple moving average, not the exponential. Let me tell you why. One, I can figure out the math in my head. I know that the periods that were 5 days ago, it's easier to calculate that in my head and just simply replace it. It's 20% of the value. For the EMA, it's a different calculation, so I can't really anticipate what the direction is. The EMA gives more recent data, more weight in its calculation. I don't believe that this last bar right here was more important than this bar where this 5-day moving average began 5 days ago. So what we saw here, I've put the exponential moving average on there as well to just kind of show you that if you had been looking at the 5-day exponential moving average, you can see in here that thin blue line was flat and we made a higher high above it. So if you were looking to buy a higher high above the flat to rising 5-day exponential moving average, that would have gotten you long right here. If you didn't get out at the close, then you got smashed on the open the next day. The 5-day moving average down here was the reason I did not hold any S&P 500 and was very happy about that. So that's enough about that for now. Let's take a look at where we are currently. We're right on the anchor from this point right here. We are also closing above the 50-day moving average on a weekly basis. So that's good. What does it mean? Does it mean we should buy here? I don't think so. I don't think you buy the touch of the 50-day moving average. Had you bought the touch of the 50-day moving average here at 541.50, you had to see the market go down to 537.50. To me, that's not acceptable. You're buying into a decline and just guessing. Instead, we want to wait to see that we have evidence the buyers are gaining control on the shorter term time frame. Do we have that evidence yet? Well, we have this high, we have a lower high, and we have another lower high. We have this low, a higher low, and maybe another higher low. So maybe we're starting to become a little bit more neutral in the intermediate term time frame. But as long as we're below that declining 5-day moving average, I'm considering this market guilty till proven innocent. Get my face out of the way here, and let's sketch out what that might look like. So if the 5-day moving average, as we get rid of this data Monday and Tuesday, meaning that this is Monday's data from this week, this was Tuesday's. So on Monday and Tuesday, unless we're way up here, that 5-day moving average will continue to decline. So I think that maybe we see something like this. Maybe we rally up to the anchor from the all-time high, sucker people in with a declining 5-day moving average, and then come back down, neutralize a little bit, and then as that 5-day moving average flattens out, then we make a higher high above it. That's where I want to get involved. I want to get involved not because I think it's the absolute low, but it's where I think the momentum is turning. I'm not trying to buy this level, because if I tried to buy this level, I tried to buy this level, and I might have gotten stopped out right over here as it crashed into the close on Thursday. It didn't crash into the close, but had a strong sell-off. Anyways, I'm looking to buy as the trend alignment occurs. That's why my first book is called Maximum Trading Gains with, I'm sorry, that's my second book, Trend Alignment. I forget what the name of the title is. Technical Analysis Using Multiple Time Frames, Profiting from Trend Alignment. I should know that. Anyways, what we're trying to do is buy the strength after the dip. There is no strength yet. We have maybe some higher lows, but we don't have a pattern of higher highs and higher lows above the 5-day moving average. So I'm simply not willing to get involved. I don't need to catch the bottom tick. If I buy here, then I know that I can set my stop under one of these higher lows and say that's my definition of trend. If I have a higher high here and then the market comes back down below this level, well, my emerging uptrend here is now broken. I have an objective level to get out of the market to say I'm wrong. The market doesn't care what I think. So let's take a look at the NASDAQ. We came down to the level where we were supposed to. I've mentioned this a couple times on Twitter, that we had the anchored volume weighted average price from the April low right in here, and that coincided with a 50% retracement of this low to this high. So this is a 38.2% retracement, this is a 50%, and this is a 61. So we've retraced exactly half of it. Same story here. Do we have any evidence the buyers are gaining control? No, we don't. And if you were looking at the exponential moving average, you might have looked to buy above that right here. I don't use an exponential moving average. Doesn't mean you shouldn't if you find it useful. I have never found any advantage at all to an exponential, so I will always use a simple as long as I still see the edge with that, and I continue to see the edge there. So I'm not interested in changing to a exponential, but I'm not telling you should do anything other than what's right for you. Monday and Tuesday we get rid of this data, so it's highly likely this 5-day moving average will decline. Maybe again we run up like this and start to pull back a little bit. Maybe we even undercut this low. That would be really nice to see. Grab the stops that are under here for the people who think they caught the low, and then maybe higher highs and higher lows right here with a flat to rising 5-day moving average with a stop under here. It's not a prediction, it's a scenario. It's what I would love to see happen, because it would give me the confidence to get in with size over here, knowing that my risk is limited. If this is truly an uptrend, I want to buy that higher high. I'm not going to wait for volume. Where does volume come? Volume comes at turning points. That's where volume comes. Volume will come if the market does something like this. The bigger volume will probably come on this day right here, about 490 or so. That's where it's a good place to take some profits. Probably before that, because we have the anchor from the high here, as well as that declining 20-day moving average. So the market's message remains mixed. The semiconductors are, again, they're down 17%, I think it said on that spreadsheet, off of the all-time highs. Not quite a bear market, but it's certainly a bearish trend. I don't need 20% down to call it a bear market. I know that once it broke here, the trend was bearish. Over here, it was neutral because we were trapped under that flat 5-day moving average. So that, to me, was a reason not to be involved long and sidestep this gap lower, not get long here with the declining 5-day moving average, and still not looking to get long because we're below a declining 5-day moving average. In this case, it's interesting to see that the 5-day exponential is lined up perfectly with the 5-day simple. I don't really read into that. I'm just pointing it out because it's interesting. Same story I'd like to see in here. Maybe even we see a deeper flush down to the, not the 50-day moving average, because that's, not only are we below it, but that 50-day moving average is declining because we're getting rid of this data over here. So maybe we head down to the year-to-date anchor. That would bring it all the way down to 225. I'm not calling for that, but if it happened, I'm not going to be a buyer before that unless we see a pattern of higher highs and higher lows above a flat to rising 5-day moving average. If it bleeds down to there, it will do so without me losing my money. The Russell 2000 is a place where we have better strength showing up, and this is obviously the place where money has been going to. We have this pattern of these higher lows in here. We broke this little band of resistance, however, on a gap, and now we have this market where you can say, if you're just a recent purchaser of the Russell 2000, a longer term trader, I think your stop probably goes under here. For a swing trader, maybe up underneath this low right here from Thursday afternoon. Those look like the good places for a stop. Biotechs continue to be strong as well. This group has been a leader, and they did lead, in fact, percentage-wise this week. I'm still looking. I actually was looking at it yesterday morning and had an alert set. I'll show you exactly where. Not an alert set, but I was watching it very carefully, and for some reason I just completely ignored it when I was supposed to buy it, which was yesterday. So let me just, sorry for changing that all around, was right here. As it gapped up, you don't chase the gap, you wait for it to get back above the volume weighted average price. I was staring at it there. I think it was 99.90. For some reason, I didn't pull the trigger, and then I didn't want to chase it. I did make a purchase over here after it bounced away from the volume weighted average price, but it was not the trade that obviously made the good money yesterday. So that's the way I look at these things. If I miss the bigger picture, then I have to look to shorter term time frames and say, is it still possible that this move has the ability to continue? Financial stocks hold up well. They broke above this little range. I would say if you're long in the financials, that this is your most recent relevant higher low. Ideally, what it does is it pulls back, tests the 5-day moving average, and then begins to rise. Then you can set your stop underneath that higher low. I don't trade the financials, so I don't really have much interest in them, but they are looking bullish here, and you can see that this group is just off the all-time highs. So they are where there is strength in this market as well. Energy next week looks like it's a likely area that buyers are going to start to gain some control. Now, we've been rejected this week at the anchor from the all-time, not the all-time high, the high this year. We came right up to it today. Last week's move, as it broke above there, I was suggesting not to be a buyer here because it was stretched, but to wait for it to pull back. It's pulled back. Now, with this declining 5-day moving average, I think what you want to see ideally is something like this, and then perhaps buy along that area with your stop maybe underneath here. So energy probably looks the best setup for next week. Let's not forget about Bitcoin for a moment. Let's talk about that. And here we can see Bitcoin. We had a pullback this week right to the anchor from this prior high, and buyers emerged right there. We can see that on that 4-hour time frame, it was a real dynamic surge of 4,000 points off of that. So this is clearly to me an important higher low in Bitcoin. If you get some pullback down towards that 5-day moving average and the anchor off the all-time high in towards about 65 and a half, then I think you want to look to buy strength after that pullback. Ethereum, a little bit not as constructive. It found buyers at the year-to-date anchor so far this week, but that should change there. Okay, they weren't married together, but you can see the weakness in Ethereum near term, so not quite as constructive. And Solana, let's make sure we change that daily time frame as well, is quite bullish looking. I think if you're involved here or looking to get involved, your stop would go underneath this level, probably about 164.30-ish. Thanks for tuning in, and have a good weekend.